Hello everyone, my name is Thu Nguyen, the lead portfolio manager of VVF. I'm very pleased to give you an update on the Vietnam stock market and the fund's performance in the first quarter of 2021. The Vietnam stock market did quite well in the first quarter, with the VN index rising almost 8% in the first 3 months after a rather choppy start in January. The market continued its momentum in April and broke through its long-time resistance level of 1200 to a new all-time high record at 1252 points on the 12th of April. In terms of liquidity, the market is now trading at an average daily liquidity of $820 million, which is almost 3 times as high as the average we saw in 2020. The stock market's performance has been supported by the financial sector, the real estate sector, and the material sectors. The financial sector now accounts for 32% of the index and increased 11.6% in the first quarter. The real estate sector, which accounts for almost 25% of the market, also increased 15.6% in the first quarter. One of the larger sectors that did not do as well was the consumer staples sector, which accounts for 12% of the index and declined 2.6%. Despite the increase of the stock market and therefore the valuations of the market overall, Vietnam is still trading at a rather compelling valuation at 15.5 times forward PE, and this compares very favorably to other markets in the ASEAN region, as well as against the 18 times PE at the previous peak we saw in 2018. Therefore, we think that there is still scope for the market to move up higher on the ground of strong fundamentals, relatively good growth. The market is expected to grow in terms of EPS, average EPS growth at 25%, which, if you compare to other markets in the region, may not be as high. But this is because of the base effect, because last year, the stock market in Vietnam did not see a very significant drop in EPS growth. In fact, we were almost flat. Within ASEAN, only Vietnam and Malaysia are expected to deliver profits this year that exceed 2019, which is pre-COVID level. Vietnam did face a strong outflow by foreign investors in 2021 at 685 million in the first 3 months. However, we are not alone in this regard because many other ASEAN markets did suffer the same situation, with Malaysia outflow reaching $425 million and Thailand and Philippines outflow reaching between 950 million to $1 billion. The situation in Vietnam is characterized by retail investors in a few markets who actually participated in the Vietnam stock market at the previous high level between 2017 and 2018. However, there is an encouraging sign that we're seeing new foreign inflows from investors around the region, particularly in the form of ETFs. The most recent news we saw was a Taiwan ETF that completed its successful IPO for $180 million, focusing on the Vietnam market. It's also interesting to note that with the recent net outflow in 2020 and the first quarter of 2021, the foreign ownership of the Vietnam stock market has now declined to the 2017 level before the previous surge that saw the market reach 1200 after almost 12 years. We think the foreign investors' interest in Vietnam remains high, and it's a matter of time before the foreign inflow comes back to Vietnam due to our strong fundamentals, good EPS growth expected for this year at 25%, and the relatively compelling valuation compared to other ASEAN markets. Retail trading has increased quite significantly in Vietnam and today accounts for as much as 87% of the average daily liquidity. This is a significant increase from the average 80 to 85% level that we saw 2 years ago. And retail accounts opening has also been on the rise, with the March new accounts opening reaching 110,000 new accounts, which is an all-time high in Vietnam, and that number alone is 30% of the entire 2020 new accounts opened. The retail trading boom is not something peculiar to Vietnam. In fact, it's a global phenomenon that we also observe in many other markets. And we expect this trend to continue given the low interest rate environment in Vietnam and the fact that the forward earnings yield is currently higher than the deposit rates in the bank. And also, I think there are many other catalysts for the stock market to continue to rise. The nearer term catalysts include EPS growth at 25% for 2021, but further down the road, there are also other catalysts such as the further reform of the stock market and the upgrade to the emerging market status for Vietnam. Although there are certain signs of inflation picking up this year, we think that it's important to distinguish the inflation in the first half and the second half. In the first half, I think a lot of the noise around inflation is due to the base effects. Because last year, obviously, the economic activities were pretty much shut down during the COVID outbreak. And therefore, we have what is considered to be a low base effect. So the first half of this year, we might see certain pickup in inflation's number. In the second half, we think inflation would be determined by the tug of war between the fall in the pork price and the rise in oil prices. But that being said, we do not think that inflation will exceed 3% this year. And the government will do everything it takes to keep the inflation in check. The sectors that we like most for the fund are sectors which we see the best earnings growth in. Banks, for instance, are expected to deliver another good year of earnings growth on the back of better asset quality and therefore lower credit cost, less provision, higher NIMs, as well as higher fee income. Many banks in our portfolio are increasing their exposure to the retail customers where the margin is higher than the corporate segment. Another sector that we like is the real estate sector, and we are expecting good earnings growth from this sector on the back of strong demand from the middle income class, which is also rising in both size and stature within the Vietnamese economy. Many developers are launching new projects after some delay in the past 12 months and are seeing very good demand from the end customers. Another sector that is also benefiting from the real estate growth is the materials sector. And this sector also gets to benefit from the increased public spending by the government in building new infrastructure. Last but not least, the technology sector. And in fact, we have one single company in this sector, but it happens to be the single largest position, FPT. We think the company can deliver another 20 to 25% earnings growth this year on the back of higher demand for its software services, as well as digital transformation and telecom services. The fund's performance has been very good both in 2020 as well as in the first quarter of 2021. Last year, we delivered 22.8% return for our shareholders versus 15.6% return of the market. In the first quarter of this year, the fund delivered 8.2%, which is slightly higher than the performance of the stock market. The biggest contributors to the fund's performance this year has been FPT, which is our largest position and the technology champion in Vietnam, Hòa Phát, which is the largest steel maker, and the banks that we have in the portfolio, including MBB, ACB, and VP Bank. For the rest of the year, we are confident that our portfolio will continue to do well because our core holdings are positioned in the sectors which we think will deliver the strongest growth, earnings growth. For the market, we expect the average EPS growth to reach 25%, and the market is still seeing very healthy participation and demand from investors, both the retail investors as well as the return or new participation of certain foreign investors. Thank you very much for your support.